Paycom Software provides cloud-based human resources solutions for small and mid-sized companies in the United States. It has been recognized by Fortune and Forbes as one of the fastest-growing publicly traded companies in the world. And in the last quarter, it was one of the worst-performing stocks in the S&P 500. Also, it is down 73% from its peak at the end of 2021. So let's find out, why is it down so much? Is it still a fast-growing company? And can it be an interesting investment opportunity now that the price is much lower? If you were to invest $1,000 into this company 10 years ago, you could buy around 70 shares. And now they would be worth something close to $10,390. That is very impressive. And this company also pays dividends, so in that time you would get, wait for it, $2 as dividends. Actually, probably a bit less than $2. So if we add together the current value of shares and the impressive dividends, we get $10,392. And that is a gain of 939% in 10 years. So the past results are incredible, and let's remember that this stock is massively down right now. So if you would sell it at its peak, you would get a return of over 4,100% in around 6 years. That is just crazy. Individual insiders, that is a check. 12.8% of the company is owned by individual insiders, so the management has its skin in the game. That is very encouraging. And are individual insiders buying? That is an X. Some insiders are buying, but the majority of them is selling the stock in the last year. And do super investors own this company? That is a check. We see 3 super investors, including Bill Nygren, for whom it is over 6% of the portfolio, and also Terry Smith, but for him it is only 0.25% of the portfolio. And are super investors buying right now? That is a check. In the last quarter, they bought 2,880,000 shares and sold just over 600,000 shares. So a lot of buying is taking place. Return on invested capital, that is a check at 26.7% 10-year median returns. And we want to see this number higher than 10%. That is a very nice beginning. And what do we know about net profit margin? It is a check at 5-year average of 20.7%. And the sector median is only 6.1%. So they have a meaningful advantage over their competitors. And now let's take a look at share buyback. It is an X. In the last 10 years, they issued extra 11.8% of shares. But what is very important to mention is that since 2016, the number of shares is basically staying the same or even slightly going down. So this 11.8% is probably a bit misleading. And the debt? It is a check. Paycom Software does not have any debt. And if you watched some of my other videos, you know that I really like companies with no debt. Revenue growth, that is a check at 31.7% 10-year compound annual growth rate. So revenue is still growing very nicely, but not as fast as it did in the past. In 2023, it was at 23.2%, and 10 years ago, it was over 40%. And the management has blamed this revenue slowdown on its Betty product that uses AI at its core, because this product is probably destroying revenue streams from other non-AI products. Also, competition from startups is getting more and more intense, partly thanks to AI. But the main problem that had a meaningful influence on the stock price is not the revenue growth, but a much smaller number of new clients. Since 2020, the growth went down from 16.8% to just 0.7% in 2023. So they are still growing, but recent results may indicate that the great years are behind them. On the positive note, the company's expansion into international markets is encouraging and could provide a boost to the company's growth rates. Okay, so let's take a look at free cash flow growth. That is a check at an incredible 131.6% in the last 10 years. But last year, it was at 25.9%. And earnings per share growth, that is also a check at 85.8% in the last 10 years. But in 2023, it was only 21.5%. So the long-term growth is out of this world, but when we look at the shorter time frame, it is a bit less rosy, but still very strong. The dividend yield is 1%, so shareholders can expect to get $1.50 annually per every share. And the payout ratio, that is an X at 19%. And we want to see the payout ratio somewhere between 20 and 50%. So this is actually a nice result. We are getting a decent amount of earnings through dividends, and at the same time, such a dividend is very secure. And what about dividend growth? It is an X. They are paying dividends only for about a year, so no growth here so far. Price to earnings ratio is 18, so that may indicate that Paycom Software is not that expensive at the moment. But to properly value this company, we will use a discounted cash flow formula, and we will create 3 scenarios of its future growth. So in the low scenario, we will estimate a growth of 15% for the first 5 years, and then 13%, in the medium 17%, and then 15%, and in the high scenario 25%, and then 20% growth. So the low scenario is showing a story in which Paycom Software is growing slower than the predicted growth of the industry, which is an incredible 17.4%. Medium is anticipating that this company will grow with the market, and the high one is a bit closer to its past growth, but it is still way smaller than what we saw in the past. So it seems that we are pretty conservative here. So with such estimates, the intrinsic value in the low scenario is $161, in the medium $185, and in the high scenario $294. But we have to always apply a margin of safety to those prices. I use a 30% one, and with such a margin, we get in the low scenario $112, in the medium $129, and in the high one $206. And the current price is around $161. So the low and medium scenario with the margin of safety and low scenario without the margin of safety are in the red. Rest of the results are green, so this company may be close to its fair value currently. Paycom Software was named one of the fastest growing companies in the world. So let's go to our Stock Ranking Pro and see how strong is this growth when compared to other companies analyzed on this channel. So let's filter all of them so that we would see only companies with the highest score when it comes to growth. So we see that there are only 7 companies with such a great score. But now let's sort them by the best overall score. And we see that Paycom Software is the second best company in this group. So it definitely looks like an interesting opportunity. We can get a great company that has an incredible growth record at somewhere close to its fair value. The market sentiment may be negative right now, and it may stay that way for a very long time, but the fundamentals look quite solid. Thank you so much for watching, and see you in the next one.